Well, Tesla is set to report earnings after the bell today. In focus, of course, is the normal automotive story, but also Tesla's autonomous vehicle plans. Joining us right now with what he's expecting is Tim Higgins. He's the Wall Street Journal business columnist and a CNBC contributor. And Tim, fill us in. What are you looking for?
I think investors are looking for a lot of commentary and color from Elon Musk about the status of those robotaxis that were launched in late June in Austin, Texas, in a very limited fashion. There's just a few out there. He's expanded it a little bit, looking for how's it going, what's his expectations. This is where a lot of people are betting on the future of the company here and these few little robots that are out there in the world.
That's going to be important in part because the company is kind of going through a transition period. Elon Musk is back at work. They've moved out some of their executives. In the last quarter, they actually reported a 20% drop in the auto revenue. And that was something that people were kind of focusing. So how much of this is going to be on the present, what they're seeing with their absolute issues in terms of car sales? How much of it is that future component, Tim?
Yeah, clearly the car business is hugely important for the now. But today's call with analysts after the results drop is really going to be a vibe check, right? How is Elon Musk doing? How's his tone? Is he excited? Investors looking for kind of that growth story, the return to a growth story, which you're not seeing in the delivery results for the cars. They're betting that the future of the company is going to be in robots. And so we're in this really weird period, and hence they're looking for things like, is he excited again, or is he, is he upset? Is he really locked in? Because he's been so distracted in the last few years. Tesla investors are hoping that now he's back to what some are calling the wartime CEO. And it's not clear yet that he's 100% focused, or even, he's so busy if he's 10% focused. They want to know where his mind is.
Yeah, and they're going to want to know about the Robotaxi early efforts in Texas, what they're seeing from that. What are the reports that you've been hearing in terms of how that's going so far?
Well, he's had folks in it, real people. I mean, they are somewhat associated. They seem like they're fans or they're Tesla customers, and they've been somewhat positive. People are on X, his social media platform, talking about how great this service is. But, it hasn't had the huge test yet that Waymo's had. Alphabet's robot taxi service, which is operational in a lot of cities. I'm in San Francisco. You can hail one of these. You pay money. It's a business that is growing, and Tesla is still in those really early stages. And the bigger question is going to be kind of going forward is operationally. How do they get to the next cities? How do they grow that beyond just the small area in Austin that they are? It gets to the question of how is it a business?
Right. The other part of that, though, is XAI. A lot of excitement around that, too. You expect we'll hear a lot on that front or not?
Well, they're separate companies. There's this kind of fever dream among some investors that maybe Tesla would acquire this startup that Musk started a while ago. But Musk recently on X is saying he doesn't see that happening. He wants to bring a vote to Tesla investors with the idea of maybe they can invest in XAI like SpaceX, his rocket company, is supposedly doing. There's some synergies there potentially, but it's hard to imagine a scenario that Musk would want XAI under Tesla. It exposes that startup to all the challenges of being a publicly traded company under Tesla. And as we all know, there's been some kind of challenges with XAI in these early days. Its chatbot, Grok, having some controversial comments that trended on X.
Don't you think long term, I don't know. I understand right this moment not wanting to do a transaction like this, but long term, given just the way large language models work and what Tesla has and what XAI has, and also just the need for cash, the big cash burn. I'm not saying it's going to happen today. Maybe they need to solve some of the other issues first. But you don't think that long term, at 3 years from now, it'll be one institution?
It's, at this point, Musk has kept his company separate. There's a lot of overlapping operational things that go on. He shares people, he shares resources at times, but there is some advantages in his world to keeping it a separate company.
Some big names on deck for earnings today. One of them, Tesla, set to report after the market closed. Let's get more from Bloomberg's Danny Lee. Danny, what are we expecting?
Well, Tesla is entering a period of historical weakness driven by the fall in sales quarter on quarter. So, we've seen the most recent quarterly period of which we'll report sales are down 14%. And so that may very well be baked into earnings. We are expecting revenue for the second quarter of around $23 billion US dollars, earnings per share of around 44 cents. But this comes off the back of the first quarter when it's a fascinating transition. In fact, when we heard the likes of US President Donald Trump encouraging people to buy Tesla EVs, then into this second quarter where we saw this dramatic split between Elon Musk, who runs Tesla, and him exiting the US administration, leaving his Doge position. So it's now for Elon Musk, he has the time to really reassess what is going on at Tesla, and he has pledged to turn things around given its historic weakness and the fall in sales across the board, and from the likes of Europe, in the places like in Asia and China, and even in parts of North America. So yeah, this is a very key time that investors will be looking to hear more from Elon Musk about what he will do to try and turn around Tesla.
Tesla is set to report its second quarter earnings after the bell today. And this isn't just another earnings update. It comes at a moment of significant transition for the company. Expectations are muted on the financial front, with analysts forecasting around $23 billion in revenue and earnings of 44 cents per share. But the real story isn't just about the numbers. It's about the direction of the company and whether Tesla can reignite its long-touted growth narrative. Quarter over quarter, Tesla's vehicle sales have dropped 14%, continuing the decline we saw earlier this year when auto revenue fell 20%. That weakness isn't isolated. Demand is soft in major markets like China, Europe, and North America. Discounts and price cuts may have helped keep volume afloat in the past, but they're now pressuring margins and raising deeper concerns about whether Tesla's EV momentum is stalling. Amid this backdrop, investors are especially eager to hear from Elon Musk directly. It's been a turbulent year. Multiple executives have exited the company, and questions continue to swirl around Musk's focus given his simultaneous leadership of Tesla, SpaceX, xAI, and his social media platform X. With so many spinning plates, today's earnings call isn't just a financial update, it's a temperature check on whether Musk is truly locked back in. And for many investors, the answer to that question may lie in the future Musk continues to pitch: autonomous vehicles. In late June, Tesla quietly launched a small-scale robotaxi pilot in Austin, Texas. A limited number of cars with no drivers are giving rides to select users, many of whom are Tesla fans or insiders. Feedback on social media has been generally positive, but the scale is extremely small. It's more of a technical demonstration than a commercial service at this point. Compare that to Alphabet's Waymo, which already runs a functioning robotaxi business in several U.S. cities, offering fully driverless rides to the public for a fee. Waymo has logged millions of miles and is operating at a scale Tesla hasn't touched yet. So the question becomes, how fast can Tesla get there? What are the regulatory and logistical hurdles? And does Tesla have the operational focus to scale something like this beyond one Texas test market? It's not just about building the technology. It's about building the business around it. Investors want to know what the roadmap looks like. When will these robotaxis become a scalable revenue stream? Will they be sold as individual units or run by Tesla as part of a network? How will the data and user feedback from Austin shape expansion into new markets? At the same time, the discussion around AI is expanding beyond vehicles. Elon Musk's separate startup xAI is drawing major attention. Its chatbot, Grok, has already made headlines for its integration with X and for some controversial responses. But beyond the buzz, there are serious strategic questions at play. Could xAI become Tesla's long-term AI engine? Will there be a formal tie-up? So far, Musk has made it clear he doesn't plan to merge xAI into Tesla. Instead, he's floated the idea of allowing Tesla shareholders to invest in xAI separately, in a structure similar to SpaceX and Starlink. But even without a formal merger, there's plenty of overlap: shared talent, shared data, shared infrastructure. And that raises the possibility that, over time, Tesla could increasingly rely on xAI's models to power features in autonomous driving and vehicle software. Still, merging the two would expose xAI to the scrutiny and regulation of being under a public company. And with xAI still in early stages, it's understandable why Musk might want to keep it private, for now. But the long-term alignment of the two companies remains a key narrative for investors looking for Tesla's next act. Meanwhile, competition is growing. Chinese automakers like BYD are aggressively expanding their EV reach. In the US, legacy brands are catching up with their own electric models. And in the self-driving space, other players are further ahead in real-world deployments. Tesla's bet on vision-only self-driving without LiDAR or radar remains controversial. Some experts question whether it can match the reliability of other approaches, especially in complex urban environments. This is a critical moment. Tesla's not only trying to fix its core car business, it's also asking investors to believe in a future of robotaxis, humanoid robots, and AI leadership. But belief isn't enough anymore. Investors want execution. They want to see that these bold promises can translate into real, scalable products. And that brings us back to Elon Musk himself. His tone on today's call will matter as much as the content. Is he energized, focused, engaged, or still distracted by his many other ventures? Some investors are hoping for the return of what they call the wartime CEO, the Musk who's deeply involved, ruthlessly focused, and obsessed with solving the company's toughest problems. Others worry that his attention is spread too thin to lead Tesla through this critical phase. Ultimately, this earnings call is about trust. Trust that Tesla can recover from its recent stumbles. Trust that autonomy isn't just hype. Trust that Elon Musk is still committed to delivering on the vision he spent a decade selling to the world. The numbers will matter, but the bigger story is whether Tesla can show the world that its future is not just futuristic, but actually within